Thank you for tuning in. Dividend Dashboard here, and welcome to episode 6 of Road to 100K Invested. This is a series I created where I track my progress to set milestone, covering how much I'm investing, performance, on my account's value, dividends, and outlook for next update. So if you're a like-minded investor on your journey to reach your first 100K, or someone who likes following others' path to financial freedom, consider subscribing and liking this video. It really helps my channel grow and expose myself to new investors. So with no additional fluff, let's dive in. My 401k is now sitting at $16,500, which is up 5.26% since last episode. It's been trending nicely lately, and that steady growth is exactly what I want to see in a long-term account like this one. Over in my brokerage account, the balance is now $31,600. That's a 5.78% increase from last episode. A mix of consistent contributions and a strong market helped push things higher this month. When we combine both accounts, my total portfolio value comes out a little over $48,160, which means I'm up 5.60% overall from previous episode. Slowly but surely, we're closing in on that 50K mark, halfway to the ultimate goal of hitting 6 figures invested. Now, let's talk about contributions. For my 401k, I didn't add anything this month, still sitting at $0 in new contributions. My employer hasn't set up the account yet, but after reaching out to HR, they told me that it should be fully up and running within the next 4 to 8 weeks. Once it's active, I'll finally be able to start contributing regularly and take advantage of that employer match. As for my brokerage account, I've been sticking to my plan and continuing to invest $160 every week. I like keeping that consistency no matter what the market is doing. It keeps me disciplined, helps smooth out the ups and downs, and makes sure I'm always adding to my long-term goal of hitting that 100K invested. Now, let's move on to how everything is invested. Starting with my 401k, this account is fully invested in the S&P 500 index. I like keeping it simple here. The S&P 500 gives me exposure to the 500 largest US companies, so I'm automatically diversified across different sectors without having to pick individual stocks. It's a true set it and forget it approach for long-term growth. Right now, the top 5 holdings inside my 401k are Nvidia, Microsoft, Apple, Amazon, and Broadcom. No surprises here, all heavy hitters that have been driving a lot of the market's performance this year. Now, for my brokerage account, things are a bit more hands-on. This portfolio is spread across 21 individual dividend-paying companies. My goal here is to build a mix of quality businesses that can grow their dividend year after year while still giving me solid total return. My top 5 holdings in the brokerage are Google, Hershey's, S&P Global, MasterCard, and Visa. These positions make up a big chunk of my portfolio, and they really reflect the balance I'm going for. A blend of strong dividend growers, consistent cash flow machines, and a touch of tech exposure for long-term compounding. Now, let's talk about one of my favorite parts of investing. Dividends. Dividends play a huge role in long-term wealth creation. They're the tangible reward for owning great businesses. Cash paid directly to you just for holding shares. And the best part, when those dividends are reinvested, they start compounding on themselves, creating that snowball effect that gets bigger and faster over time. Looking back over the past few years, my dividend income has grown every single year. The growth has come naturally from 2 things: consistent investing and owning quality companies that regularly raises their payouts. Even in the short term, those payments might not seem like much, but over time, they add up and become a powerful source of passive income. It's proof that staying patient, reinvesting, and letting compound do its thing really works. Moving to performance, my 401k is currently up 16.42% for the year, which actually puts it slightly ahead of the S&P 500 up 16.25%. That makes sense since my 401k mirrors the S&P 500 and benefits directly from the same large cap strength, especially the big tech names like Nvidia, Apple, and Microsoft that have been driving the market all year. My brokerage account, on the other hand, is up 11.16%. That's a bit behind the major indices, but I'm not too concerned. The difference really comes down to portfolio structure. My brokerage is focused on dividend-paying companies rather than high-flying growth stocks. Many of those dividend names lag when the market is risk-on mode, but they tend to shine when things cools off. For comparison, the Nasdaq is up massively 22.17%, fueled by tech, while the Dow Jones is sitting at around 11%, which actually lines up closely with my brokerage performance. Overall, both accounts are growing nicely, and the key takeaway for me is consistency. I'm not trying to beat the market month to month. My main goal is is steady growth and reliable dividend income over time. Besides, having 11 and 16% performance respectively is a good number overall. The compounding is doing its job, and I'm really happy with where things are heading. As investors continue to move away from defensive stocks, some of those names have started to pull back in price. If that trend continues, I might take advantage by adding small tranches into a few of those positions. The idea isn't to chase short-term gains, but to lock in higher dividend yields and boost my immediate income while keeping quality at the core of the portfolio. For now, there are no major adjustments to my plan. I'm still investing $160 per week into the brokerage account, staying consistent with my contributions, and waiting for my 401k setup to finalize, which should hopefully happen soon based on my last update from HR. Overall, after a fantastic market-beating performance for more than half of the year, my brokerage account is now trailing the benchmark, but that is completely fine. It's continuing to deliver steady performance and reliable dividend growth, which are exactly what I need to stay on track towards my long-term goals. Progress is still progress, and every week, every contribution, every dividend payment keeps pushing that snowball a little further down the hill. That will be it for episode 6. If you enjoyed this content and want to follow along road to 100k journey, consider subscribing. If you have any questions, drop them in the comment section below. Thanks for watching, and as always, I'll see you in the next one.